Hey, what's up guys? Welcome to the Accelerated 5-minute daily training video. Sorry that I missed yesterday. I've been a little bit under the weather, and so, yeah. And yesterday was like Federal Funds Day, raising rates like, what, 0.75%, especially after that CPI number came out last week and fueled the inflation number higher, right? So, fun times. So we've got the development the long-term trend is down. And interest rates are going to continue to rise as they continue to battle inflation. We haven't had to deal with a situation like this since like the 70s or 80s, and so things are pretty crazy, and we're in pretty uncharted territory. Like I've mentioned in the past, the biggest thing that's different about this time around is that in 2008, we had, when they were raising rates last time in a significant way, there was a liquidity crisis, right, between the real estate market and everything else. I mean, that is why that it became the financial crisis that it did. Now there is tons of liquidity. The banks have trillions of dollars in reserves. Now we're headed towards a high inflation or higher inflation and slower and lower growth, which is stagflation. So it's going to be interesting to see how this plays out. It'll be interesting to see how the kind of despair affects the markets as it starts to come out that we are in a recession. We are already in a recession by key metrics, and so once they announce that, that is going to infect investor psyche, psychologically, all that stuff, and then we're going to see, you know, as companies and stuff start to have problems with debt refinancing and all this other stuff, we're going to have significant issues on our hands. So anyways, that's going to create, again, new opportunities just in different markets and different sections. And those are things we should be excited about. Volatility doesn't get as high, you know, during bull markets. It is highest and cranks during the bear markets, whether it's bull runs or the bear drops, you know. So anyways, all that to say, let's go ahead and take a look at what we're doing. We've got one more day this week. Next week, I'm going to go into I'm going to have more of a structure set up, and to where I'm going to go into and dive into specific training topics and all that, and we'll approach that then. All right, where were we? So we were looking at the daily chart of the S&P, or I guess this is the S&P. Yeah, we want to be on the NASDAQ. Here we go. Okay. All right. So we can see that the market has obviously continued to the downside as we expected. And then let's switch back up to the weekly chart. We've got our support levels, but let's go ahead and take a look at where we're getting close to, right? So we're headed quickly to this guy here, and then this is kind of like a confluence of support, right? So we know when negative news comes out, usually the instant impact from that is the strongest, the impulse. And then it's whether or not things continue. So now we've got a double whammy, right? So we've got, originally it was the CPI that came out. It's very strong, or very high, admitting that inflation has gone higher than they were expecting, higher than continuing higher, and that trend continues to the upside. And then also, it's confirmed that the Fed is a little more concerned than maybe they led to be, because they've raised basis points by 0.75, so 0.75%, which is the most they've done in quite a long time. So that's kind of admittance of maybe things really are not in as much control as we thought. So, anyways, let's break that down real quick. Actually, let's jump back over to oil. All right, and go back to the daily chart here. Okay, we talked about that yesterday about this trade here. So remember, I had talked about originally waiting for a pullback to this line here being the first kind of like semi pullback to value, okay, and then but ideally waiting for a deeper pullback to this trend line here before initiating a long position if you haven't already been in the market. I already own oil. So, but if I were going to add, this would be in my opinion, this would be a great area here, breaking this previous support level, knocking out some of the stops from the traders in this area, and oftentimes that could create a continuation and momentum to drive price down here since it's so close. And then boom, I would expect this trend to continue here and attack the upside again, which I think if we came down here, got more buyers, more long-term buyers in the program before it headed back up to the this high, I think that would be a stronger chance and a higher percent chance of it taking out the highs and in the immediate term as compared to if this just continued to trickle up towards the highs here. So anyways, so that's the 5 minutes already. So I'll let you guys go. And yeah, look forward to having a little more structure. And like I said, I've got a lot of bullet points that broke it down into about 30 different things that I can track on or that I can kind of go on tangents with every day, just doing little trainings and stuff. So anyhow, tally ho, till next time. Cheers.